How to retire from the federal government. Hi, my name is Chris O'Malley, and I specialize in tax planning and retirement income. I work with many federal employees all over the country. First of all, congratulations on your retirement, and thank you for your service. You may be wondering, where do I start? Well, after you announce it to everyone, you need to contact Postalese Shared Services, or OPM, and request your retirement paperwork. Next, you must schedule an exit interview to be conducted 30 to 60 days prior to your separation to go through the retirement package. But let's begin with a breakdown of your federal benefits. Your FEGLI, or your life insurance. It is a 5-year term policy, and what that means is it is renewed every 5 years and the price goes up because you are older. It consists of 4 parts: basic life, which is your salary plus $2,000, which is free; an additional coverage of option A, which is an extra $10,000 of coverage; option B is additional coverage up to 5 times your salary; and option C, which is family coverage, which you all pay for. But there is a problem, a big problem. If you keep it in retirement, the cost will double every 5 years. Imagine paying $2,000 a month when you're 80 years old for life insurance. Or if you don't keep it, you will lose 75% of your basic life and option A coverage, and you will lose 100% of option B and C coverage. There is an easy solution though. I can help you get your own. Cheaper, get more coverage, lock in your price so it remains the same, and cover you for long-term care if you need to go into a nursing home or you need home health care. You can call me directly at 630-834-3794 to get more information, but let's move on to your pension. Your pension retirement annuity is based on your high 3 salary and length of service. If you bought back your military time, it will be added to credible years of service. Your sick leave will be converted also to credible years of service, but if it's not a full month, you will lose those extra days. Your annual leave will be converted to an hourly rate and paid to you in a lump sum 30 to 60 days after separation. For your annuity payout, you choose either individual or joint income. The difference is, if you choose individual, you will get more money, but your spouse won't get any income continuation if you pass first. Joint is 10% less monthly income, but it will pay you both for life. Your spouse will get 50% of the higher amount for life if you die first. What gets deducted from your income? Taxes. Your pension will be taxed. The amount the government contributed will be taxed. Your contributions will not be taxed, but it will be spread out over 25 years and prorated to that payment. So generally, most of the payment will be taxed. Health insurance. If you keep your health insurance coverage, it will be deducted from your monthly check, as well as your life insurance if you keep that. Your health insurance. You don't have to keep that if you don't want to. It generally is at least double what you currently are paying. If you don't want to keep it, you can get your own private plan, or you can file for Medicare Part A and Part B. But Part B will cost you about $140 a month that they'll take out of your Social Security check. And if you get a Medicare supplement, it'll probably still be cheaper than what you'll pay if you keep your current insurance. You veterans also have the VA to choose from as well. Social Security income. If you retire before age 62, you can get the Special Retirement Supplement. What this is a portion of your age 62 benefit paid to you today to the federal employees who qualify with years of service until you turn age 62 to aid in your retirement income. The question I always get asked is, when should I take my Social Security? Now at age 62 or wait until the max age of 70? Well, the break even is age 83, where waiting is probably better. But my advice to you is take it as soon as you can. Now remember, Social Security is taxable. 50% is taxable if you go over a certain income level. Your thrift. This is the most important decision you have to make. This represents the largest portion of your retirement savings. There are many choices. You do not want to do the MetLife default annuity for many reasons. 1, it pays you the lowest. 2, you surrender the entire amount over to the MetLife. And 3, if you die early, they keep your money. To see a full explanation, click on this link to see my video. You have options. Custom make your income. You are able to do an InService Transfer if you are 59 and a half and still working to lock in your account and not lose any money and get guaranteed interest of 5 to 7%. There is no penalty or cost for this. Now, if you retire also before age 59 and a half, you can start taking income from your annuity IRA without having any IRS penalty. For your retirement, you can choose an annuity IRA that will pay you the most now, or have the income increase over time, or guarantee lifetime income for you and your spouse, or you don't need the money and you want 6 different RMD options, or make sure your money goes tax-free to your beneficiaries, or set up a stretch IRA to guarantee lifetime income for either your children or your grandchildren, or if you live too long, to have the money to take care of you, and finally, convert the account to a tax-free account. The Thrift will not accept transfer paperwork from the insurance company. It requires its own forms. The TSP-75 is the form used while you're still working, and the TSP-70 is if you have separated. Now, you need a professional like me to fill this out so there aren't any mistakes, because if there are any mistakes, even a date that's wrong, they'll reject the application. Now, the insurance company also has a qualification program called Suitability. It means that you have to have a certain amount of cash available to you within 24 hours to meet day-to-day and emergency situations. If you don't have it, they won't take the transfer. Now, what is cash available? This is checking, savings, stocks, bonds, mutual funds, cash value, life insurance, etc. The problem is, if you are working, this figure is $34,000. Now, they do count your income minus expenses, so this usually brings that number down to under $10,000. However, if you are separated, this number jumps to $89,000, and because you're not working, it's a difference of about $70,000. Now, my suggestion is for you to roll the Thrift over while you're still working so that you can get what you want. As you can see, there are quite a few decisions. Call me, Chris O'Malley, at 630-834-3794 to have a professional help you. Let's pinpoint exactly what you want. Get your retirement on the path to success, and together, let's create a strategy, organize you, and relax and enjoy your retirement. You can click on this link for a free quote or call me direct 630-834-3794. Take care and talk to you soon.